Hello there.
First up, it's been a great week. The Battle Royale portfolio is beating the market, but more on that in a bit. Microsoft shares fell 4%, so is now a good time to get in, or would you rather recommend we invest in Apple, Google, Amazon, those big guys? This is Battle 10. Let's get into it. As always, we're going to reveal who won last week's battle. We're going to have a portfolio update, and we're going to have a look at this week's stocks and find out who's going to win the battle. Without further delay, let's get underway. The shoemakers fought it out last week, and unsurprisingly, it was my favorite brand that won, Adidas taking the victory this week. Here's what happened last week. We had added £200 into each portfolio, up to 225 now. All were in the green. Battle Royale up 2.29%, but it was beaten by the benchmark, up 2.39%. What's going to happen this week? Let's find out. So let's see how Adidas and the rest of the portfolio did this week. Okay, taking a look at our portfolios in a little bit more detail and starting with the Battle Royale. Over the last 7 days, it is up 2.3%. Very happy with that, considering how much red there was last week. According to Simply Wall Street's portfolio Snowflake, it's a value portfolio with good growth potential. That's changing slightly. Looking now at the specific holdings, we're up to 9. YouGov has been our star performer, up 18.6%. Thank you very much. As I say, all red last week, so lovely to see huge amounts of green this week. I don't know whether that's thanks to budgets or elections. I think it's down to all the earnings that have been reported and some very healthy responses. Nickel's also up 10%. That was our Vimto and slushy provider. On the beach, having tanked immediately after we bought it, ended the week on 3.6% up. So that's brilliant. And our stalwart that was propping us up for the last few weeks, Tesla, has been the worst performer over the last week, down 7.5% over there. Everything else ticking over nicely. Thank you, Battle Royale. The benchmark is down 0.9% on the week. And finally, the income generator is also down 0.3%. Turning now to stock events to take a look at the income generator's earnings. Annually now we're up to £6.94. Our next payment in December is £1.34, and in March £1.22, which means our first payment to a lucky subscriber is going to be £2.56 at this moment in time. By March, hopefully that'll be a lot more. Our yield is 3.07% or 3.08% yield on cost. And so here the portfolios are compared, and the Battle Royale has beaten the market. Thank goodness for that. Although I think unfortunately that's because the market has done quite poorly. But Battle Royale up 3.6%, and the market going along, chugging slowly away at a measly 1.21%. Here we go.
3, 2, 1, fight.
This week's theme is, can I buy Microsoft? Please? It's one of my favorite bigger stocks, but is it really any better than Apple, Google, Meta, any of those? Let's take a look. And so here they all are lined up. I thought this was very interesting. As always, bear in mind, this is only Simply Wall Street's ideas and perspective on all of these stocks. However, I was very pleased to see Microsoft, the one I was looking at, nice green portfolio. A few other interesting points to note, looking at their estimates of fair value and their estimates of forecast growth. Not a huge amount in them, but what jumped out at me was Amazon at 42% below estimate of fair value. Alphabet not far behind at 31, and Meta even closer at 34. Earnings forecasts 11% for Apple. That is not bad at all. However, Amazon's 19, Alphabet's 12, and Meta is 10.83. So there wasn't a lot to choose between them. It's going to come down to personal preference. If you look at the snowflakes, not a huge amount of future growth necessarily guaranteed. If you take a look, according to Simply Wall Street, it's 3 out of 6, whatever that means, and that's the same for each of these. So, which ones do we think? I think looking at the forecast and the current value, it's going to be Amazon as the choice number 2. Please let me know if you agree, or if you've got any strong feelings for any of the other brands, because I think that does play a big part in it. And maybe you've got a lot more information as to what these brands are going to do in the future. I would love to hear what your vote would be.
Let's take a deeper look at and consider their high-level metrics.
And then there were two. Let's take a look at these in slightly closer detail. Both huge companies, as you can see. Microsoft, 3.05 trillion. That is just inconceivable. Amazon, 2.08 trillion. You can read the rest, but a couple of highlights for me is the dividend. I always love to see a dividend, and Amazon have not caught up to the big boys on that one just yet. However, that is definitely not the be-all and end-all, specifically when we're investing large sums of money hoping for growth. It's probably a negligible thing, to be honest. However, the earnings per share, 11.86, playing 2.95 for Amazon, and Amazon with a slightly higher PE ratio. So my money is going to be probably on Microsoft. What do you think?
So what do I think we should invest in? So what do you think? Is now the time to take the plunge on Microsoft, or should I be investing in one of the other big guys? And if so, which one? What is your favorite? Please let me know. Thank you so much for watching. It's been a pleasure having you here, and I look forward to seeing you next week, where hopefully we'll beat the market once again.
Goodbye.